Teneo's Vision 2025 CEO and investor survey finds soaring confidence in the global economy. Following President Trump's return to the White House, 77% of CEOs say they expect the global economy to improve in the first 6 months of this year. That's a 32-point year-over-year increase. 86% of investors feel the same. Joining me now is the CEO of Teneo, Paul Keary. Paul, it's great to have you.
Thank you,
Maria. Thank you so much for being here. Have you ever seen, or when was the last time you saw this kind of optimism about the U.S. economy?
We haven't seen this in our data. We've been capturing this for years.
You've never seen this kind of optimism?
No, and we were in the field talking to 700 CEOs and investors, about $10 trillion of market cap. So it's a substantive sample size. Just after the election, towards the end of the year, and all roads lead to America as a consequence. So this wasn't just global optimism, it wasn't just American optimism, it was optimism directly correlated to the win in the election by President Trump. And that is across industry and it's across region. So if you think about domestic US companies, they're thinking about growing their operations in the US. If you think about international companies, they're thinking about expanding their operation in the US, which means more jobs, more investment and more opportunity. It's an unparalleled level of appreciation and optimism.
That is amazing. And does it all go back to policy? The fact that they are expecting deregulation, they're expecting their money to be treated well with lower taxes and investment opportunities, growth?
There's a number of key points. You're right. There's an expectation that there'll be a regulatory environment that's more suited to business expansion, growth, M&A. There's an expectation that the tax incentives will be maintained and facilitated for the business community. There's also the reality that the American economy is about to hit a new area of growth, and having the right policies and legislation in place to enable that growth is what the global market is expecting.
I know the survey also found that more than 64% of those CEOs say that the policies will have a positive impact on their business this year. 50% said that they are accelerating domestic international hiring activities, and more than 80% said that they expect a major return of M&A activity. Where would you expect that M&A volume to take place in terms of sectors?
Yeah, and our survey has revealed healthcare, tech, manufacturing are some of the top areas where you can expect M&A. Some industries have been boxed out over the last number of years because of regulatory constraints. So it's across the board, but there's a primary focus on those areas.
And tell me about potential for investing in America. President Trump securing, what, $1.1 trillion in investment in America just in the last 2 days. Are you hearing that kind of sentiment? People want to invest in the U.S. as well?
Yeah, the level of conversations across companies and across nations is to understand how to get on board the America train, the economic train. As we called in our report, is the Trump effect. It's directly correlated to the election and the expectation of a different tax and regulatory regime. But the Kingdom's announcement today, which you covered yesterday, $600 billion of investment within the U.S. economy, I think is indicative of some of the calculus that companies and countries are running currently about how they put their capital, where they place their bets, and U.S. is number one in that option list.
And we just heard from Sarah Fryer from OpenAI, and she's talking about this project creating jobs. I want to get your take there as well, because AI has been a major focus here in Davos. Your survey found nearly 80% of investors expect a positive investment return on AI projects within the first year. 41% of the large cap CEOs expect returns over 1 to 2 years. Paul, talk about that. What are you expecting in terms of investing and the returns you're getting?
Yeah, Sarah said to you, it's the AI era. So the data points you raise are correct. Also, interestingly, almost 100% of public company CEOs surveyed are maintaining or growing their AI investments this year. And the expectation is that they will get a return on that investment probably in the 2-year time frame. Investors, however, are demanding a greater or a shorter ramp up to that ROI. I think what I'm finding also in conversations in Davos right now, there's an expectation that the promise of AI and the application build is going to lead to a hockey stick appreciation for opportunities for companies to take more commercial advantage of the AI wave. So I expect this time next year we'll be talking about the AI era having kicked into a much more aggressive time.
So you're talking about a very fast turnaround. And in fact, that's what President Trump said. This is going to happen fast. Is that what the expectation is? You'll be investing here, you'll be utilizing these new policies, and you'll get a fast return on your investment?
Fast return on your investment, I think, and you've spoken to many great CEOs about this matter and talking to more this afternoon, but there's an energy supply dynamic that needs to be resolved. There is an engineering requirement to be resolved, but there is a high expectation among the investment community particularly that the promise of AI will yield applications that will deliver real business promise.
What are your clients worried about?
They are worried about, I think, some of the issues that you've covered very well. What happens the Chinese market? What American businesses can do business in China? What's the regulatory and legislative framework so they can clearly deploy capital or not in China? What industries are subject to national security considerations appropriately, and what industries should be free to extend their partnership and their consumer opportunity in that market. So the deglobalized environment currently is a challenge because there's large customer opportunities being missed as a consequence of that.
Do you think companies want to rely less on the China supply chains?
That has happened. One of the interesting survey data points as well. America was the primary destination for capital, but the Gulf and India were second and third. So I think India is the net beneficiary, probably benefits more from China being blocked out of some of these commercial conversations.
That's very an interesting point. I've also been hearing a lot about India. What about Japan?
Well, Japan is, a very aggressive deployer of capital. It's a very strategic partner right now across the world in terms of how it grows its industries.
And are you hearing disappointment about the Eurozone? Because there are structural issues we've been talking about this morning.
I think, President von der Leyen made a very powerful speech earlier this week about the need for Europe to deregulate, to meet the moment and the opportunity. So I think it's more hope than expectation in terms of the European opportunity, which again is partly the factor, I think, that's leading to an America First economic argument right now.
Well, we're speaking with the president of Poland, and one of his officials said that President Trump's revolution of common sense is taking hold throughout Europe. Would you agree that these policies that President Trump is talking about deploying in America are also being talked about potentially for Europe?
Absolutely. I think smart regulation, smart tax system, and an opportunity to think about big global problems on an integrated basis.
What about interest rates? I mean, where does that come into the conversation? We did see a spike in rates at the end of last year, although the 10-year is back down. But do you see companies worried about what the Fed does next?
I think the market's largely priced in the Fed's action. I think the M&A market is not going to be suppressed by that Fed dynamics. I think the opportunity still is supported that the M&A is going to be a boon. M&A is also going to bring activism. There's going to be a lot of action in the U.S. economy. It is going to be hold on tight 2025.
Giddy up. Here we go. Paul, it's great to have you this morning.
Thank you, Maria.
Thank you so much. Paul Keary here.